All right. Yeah, thanks for being here. What a great way to spend our Tuesday thinking about financing our future MBAs. Excited to have all of you here, and very excited to have Nikhil from Juno here. I will let him introduce himself, but Juno is like Nikhil is the expert on all things financing, so we couldn't think of anyone better to host this event. You can see, this is just they didn't even ask us to put this slide in here, but this like most of my class from the GSB, or not most, but a lot of the people I know that were financing their MBAs, definitely use Juno. And so if you're interested in like getting that as an option, definitely sign up. It's no commitment. You can just see the rate. They do like a group bargaining thing where they negotiate rates on behalf of a lot of students. So it's an awesome opportunity, and we are very excited to have Nikhil. So with that, I will kick things over to you and spotlight you, Nikhil. And yeah, super excited to have you.
Amazing. Thank you for the extremely kind words, John. I will share my screen here and we can jump right into it. Um, so hi everyone. Excited to see you here. Amazing turnout. Uh, Thanks again to John for pulling us all together. So I prepared this for US citizens, US permanent residents, and international students with US citizen or permanent resident co-signers. Okay. If you're an international student without a US co-signer, don't worry, some of the stuff in here might not apply to you. I'll point out the sections that don't. Okay. But just if you're reading through this deck later, just remember that some of the stuff written down is um, meant for this particular audience. Okay. Let's jump into it. Oh, yeah, my disclaimer, right? I'm not giving you advice, etc. I haven't evaluated your personal situation. I don't have any 3-letter, 4-letter acronyms attached to my name. Well, I'm an MBA from Harvard, so that helps. So okay, who am I? I went to UFI, did my aerospace engineering there, landed my dream job at Boeing. I have nothing to do with whatever's going on with that company right now, but had a lot of fun while I was there. Got a little bit bored, went to HBS, finished my MBA, but in the process of doing that, started Juno. So, like John said, what's Juno? It's a group negotiation to get cheaper student loans. We started back in 2018. We put together a Facebook group of 700 people, went and negotiated a deal with a bank, and the outcome was phenomenal. Folks saved like $14,000 on average compared to the federal loans, right? So then we said, okay, let's just do it again and again and again. And now we've sort of become the default way, top MBA programs fund their business school. Okay, so I think the chart John shared, I like that chart much better. I think I'm going to swap out this chart with his. Um, so that's quick intro about me. Now, one of the most important things you should know as you're getting into B school is about budgeting for B school. Okay. A lot of people I see go to a chart like this that's published on your school's website. Okay. Every school is going to have a chart like this. It's called the cost of attendance, and they'll have some of their tuition fees, etc. And the tricky part is they'll have a guesstimate for your room, utilities, living expenses, something like that. Okay. And that guesstimate is pretty much always wrong. Um, Look, it's totally possible, and plenty of people live within the budget prescribed in the cost of attendance. Okay. But a lot of the MBA programs have a certain social component to them that is not accounted for in this budget. And so the more you participate in that social component, the less likely you are to be able to live within the budget prescribed by the school. Okay. Um, Based on a few surveys that we've done, we see that the median person going to sort of these top business schools, they spend more than the cost of tenants. We suggest, we've created this little spreadsheet, juno.us/MBA-estimate. It gives you a list of categories to sort of jog your memory and say, okay, I need money for this, I need money for that, etc. Right? So you can use that, try to build your own estimate when you do that. If you're a little bit lazy, or if that exercise seems a little bit daunting, The number I like to use sort of in my back pocket is 15,000. Okay, 15,000 per year above what your school has put down as the cost of attendance. Okay, that gets you into, somewhat comfortable territory for enjoying a lot of the social experiences um, that are available, right? And when I keep saying social experiences, I'm really talking about a lot of trips. This is an amazing survey. I think this is one of the most valuable things we have. So I'm going to actually open it up. But it tells you, how often are people traveling, right? How much people are spending on travel, how long the trips are, etc. So a lot of stats. This is based on a survey of 300 students at the top MBA programs in the US. Okay, so definitely worth checking out. Okay, and the other part is food and alcohol, right? People tend to have different tendencies. One thing I see people do is, I like to call it wishful thinking, right? They say, oh, I know right now I go out every weekend and I go out most weekdays. But no, no, no. In business school, I'm going to be disciplined. Uh, you can try. You're less likely to change your habits in that direction. Jeff is like rolling on the floor laughing here. But yeah, so that's, just don't come in with your eyes wide open. Okay. Okay. Uh, so quick note on grants and scholarships, right? So one thing we suggest you do is negotiate your offer. Okay. If you are fortunate enough to get a scholarship, ask for more politely. If you're fortunate, if you didn't get a scholarship to begin with, ask for a scholarship. Okay. Some schools are merit based, some schools are need based. So you need to think about the argument you're making when I use the word argument lightly, right? Like you're putting forward a discussion, right? So it's a very polite ask, but we suggest you do that, right? Because from what we understand, I don't have any crazy inside information, but I talk to a lot of people in the space, right? And what I can put together is the people who ask, um, there is room for them to get. Okay, so if you're not asking, you're not getting. Okay. Um, so that's on grants and scholarships, right? If it's a need-based program, make a need-based ask. And if it's a merit-based program, make a merit-based ask. And yes, politely pointing out that you have an offer from another school that's also similarly ranked, etc. We all like to think, oh, schools are above that or something like that. No, everyone likes to protect their yield curve. At least that's what we like to think. So no harm in mentioning it, just be polite. Okay. Okay. So usually at the end of this exercise, right, this MBA-estimate worksheet, most people say, well, I think I'm going to need some student loans. Okay. Let's talk about that. That's sort of become my expertise over the years. Um, the process fairly simple. Once per year in the summer, before the fall semester, right? You're going to figure out how much you want to borrow, where you want to borrow it from, and then whichever source you're utilizing, you complete the process to get the loans from that source. But I don't want you to stress too much. And we'll talk about the loan amount a little bit more in detail in the next few slides. But I want to tell you ahead of time that don't stress too much about getting the loan amount precisely right. If you underestimate, you end up applying for a second loan in the middle of the semester, not the end of the world. If you overestimate, you prepay some of the loan. These loans, especially the private loans, they don't have any origination fees, they don't have prepayment penalties, so it's easy to do that. With the federal loans, there's some, you lose a little bit of money, but it's not really that much. And if you really end up in that situation, email me. I know ways to um, get you through that without having to pay any fees. So generally, I like to take the approach of overestimating and then just prepaying, okay, especially on the private loan side. So we'll talk about all of these differences a little bit further, but wouldn't stress on getting the loans amount perfect. Okay. Now, I just told you you might spend more than the cost of attendance, right? In fact, I told you you're likely to spend more than the cost of attendance. But the maximum you can borrow through a student loan through all your student loans, right? Combination of federal, private, whichever source of student loan is the cost of attendance. Okay, that means the money you need above the cost of attendance has to come from savings, friends and family, a different kind of loan, personal loan or asset-backed loan, something like that. But it's not coming from a student loan. Okay, and it's not coming from your scholarships. The maximum you can borrow from a loan is your cost of attendance minus the scholarships, right? And this is not something anyone other than the financial aid office is enforcing. So you can't like trick the system. Um, the one thing you can do is realize that the cost of attendance published on the website is not is negotiable, right? You can email the financial aid office and say, yes, I understand that's the general guidance, but my need is greater because I have a dependent. I need to buy a laptop for school, $1,500. I signed a lease that's this much, you know. All of these are decent arguments to make to the financial aid office. Depending on the financial aid office, they might say, yeah, okay, I'm increasing your cost of attendance, or they might say, no, I don't buy that argument, right? What you don't want to be saying is something like, I need to go travel the world and I need more money, right? That's not a need-based argument that the financial aid office can use to increase the cost of attendance and thereby increase the amount you can borrow. Okay, so if you're running up against the cost of attendance, just know it generally needs to come from a different source than student loans. Or you need to think about how to cut your budget to make sure it fits um, in the amount of money you have. Okay. Okay. The second thing I want to talk about loan amounts is, again, don't stress about really big numbers. Okay. What I know anecdotally, I don't have the data on repayment, but what I know anecdotally speaking to the lenders is that most of you are paying off the loans, me included, in like 6, 7 years. Okay. And that's sort of, you know, call it median or the discussed number, the anecdotal number that we hear on these loans. So the what we've seen in the last, and this has stayed remarkably steady, the median tends to be around 60 to 70K per year. So at graduation, it's near double of that. But even at the extreme end, right? You take this end of the spectrum, 25%, close to 25% are borrowing above $100,000 each year. And even the people in the 90K and 80K buckets, a lot of them are still borrowing, up to the cost of attendance. It's just that Juno only gets visibility to a portion of their loan, and the remaining they take from a source that Juno doesn't have visibility to. So some portion of this is also really in the 110 cap. So, give or take 25% of the borrowing population is borrowing um, somewhere up there. Okay. Now, one more thing when it comes to loan amount is to think about the assets you have, right? And very commonly, if you worked for a few years, you've developed a stock portfolio. If you need to, it's a very personal decision because there's a risk tolerance that you have to take into account when you do this. For someone like myself, right, self-classified as more aggressive on the risk spectrum, it's very hard for you to get me to sell any of my assets. Okay, it's really, really hard because if I believe that my most probable outcome is to beat the interest rate that I can get on a student loan or any loan, I'm going to borrow. Okay. I've done that post graduation as well. I refinance my loans into a 15-year loan term. Some people think I'm crazy because, like, wait a second, you're going to pay so much more interest, and I only pay the minimum payment each month. The reason is I'd rather take my income and invest it into assets that grow faster than the interest rate I'm paying. So that's one consideration. The other consideration is, when you sell $100 of your stock portfolio, especially if your portfolio is appreciated over the years, you're going to have taxable event, right? And then you're not getting $100 into your pocket. You're sort of paying a penalty upfront. Now, that's really a tax deferral, right? Because someday you're going to sell that stock, and someday, you're going to pay the cap gains on it. But it's worth thinking about what the value of that tax deferral is, and especially if you're early in your career and you don't have need for this, like if it's like a retirement portfolio or something, right? That compounding is extremely valuable, right? So yeah, don't shortchange yourself. Now, if you're in a situation where you just have to sell, right? This is your extra 10K for going above the cost of attendance. You got to sell. Right? The second one, and we're trying to influence this to help you guys this year. We haven't done this in previous years. Um, look, I graduated in 2020, right? Everyone knows what happened. Uh, half my class, not half my class, but a significant percentage of my class had their offers rescinded after they got them, right? Like January, you talk to them, they had offers in the hand. You talk to them in May, they were like, well, that offer, they got rescinded, right? Or some people worse, right? They got deferred until like August, September, and then they got rescinded. Horrible, horrible. I have no sympathy for the companies that did some of that kind of stuff. But anyways, what I said is don't plan to be broke at graduation. Right now, this is a luxury. This is not many people are going to be broke at graduation, but if you can manage it, keep some cash on hand with you to make sure you're not broke at graduation. This is the sort of the math, right? And the math basically says stick the money in a high yield savings account. Let's say you pay like 7.5%, which is about median for what Juno members were getting last year. Um, your total cost of doing this is around $1,300, right? And yes, you're spending $1,300, but you are graduating with the confidence. And maybe if you get closer to graduation, you log in and prepay some loan or something like that. That's fine. But you want to think about uh, keeping some cash on hand. The other thing that really paid off for me was being able to pursue Juno. Right? Juno wouldn't have existed if I didn't have, well, a spouse that earns, and B, cash to sort of be able to pursue entrepreneurship. Right? I was not collecting a paycheck back then, and I was drawing down on my reserves. So those options are going to show up. I don't know how many folks here are interested in buying a business, but that's another one where you learn potentially in business school that there's some attractive career paths in buying a business, but the outcomes for you are amplified exponentially if you can bring a little bit of cash to the table versus if you show up saying, I need full funding. Okay.
Nikhil,
Yeah.
there's a good question that actually I don't have the answer to. Do you know if need-based schools consider retirement accounts when considering, need-based?
Less so. My understanding is the need-based school that I went to uh, likes to focus on income, and specifically it likes to focus on recent income prior to enrolling in school. And the assets part of it, obviously it matters, but I don't think it's as influential as the income side of the equation. Right now, obviously, if you're sitting on $30 million of real estate and $50 million of stocks, that's a different situation. But for the average person, I think that income is going to influence the need-based stuff and the need, right? How much they expect you to spend and how much your recent historical income has been sort of the biggest factors I've understood over just talking to people. Okay, so our high yield savings account offer, right? Juno makes $0 on this, right? This is not something we try to make money off. Basically, before April 30th, if you go sign up, use the Leland QR code, okay? And you get an account that gives you 5.25%. Pretty sure it's top of market. I don't know if there's anyone else offering that. And we look at your balance about 30 days later, and we send you 1% extra on top of that, right? So I don't know, someone should calculate like a net effective APY or something, but it's certainly the best in the market. So yeah, go take advantage of it, put your money there. Like I said, this is not something Juno tries to make money off. It's just us trying to, we've just negotiated something that to help you on this side of the equation, right? Make this 1,300 even smaller. Okay.
Just to clarify on that, because we got a lot of Health Code tickets on that. That's not an API boost, right? That's literally 1% cash bonus on the amount that you have on your account 30 days after making the first deposit. So it's really something that we haven't seen in the market. So we have a cap though of the first $25 million of deposits. And again, as Nikhil mentioned, we really don't make any money out of it. It's just like a cool perk that we're offering to our early members. So feel free to take advantage of it.
Okay. Now the big question. This is the if you don't pay attention to any slide in this deck, right? This is the slide to pay attention. Okay. It's basically how do I decide where I get my loans from, right? And I told you, hey, some stuff is only for domestic students, right? This is that slide because if you're an international student, everything I'm going to say on the slide does not apply to you. Okay. And feel free to email me, message me. I can send you more information if you're an international student without a US cosigner. Okay. But okay, so as a domestic student, your typical options look like this, right? You can take the federal unsubsidized loan for the first 20,500 that you need. After that, if you want federal loans, you have to take the Grad Plus loan. The difference is primarily the Grad Plus is a lot more expensive, right? The interest rate is about 1% higher, and the origination fee is like 4.28%. So very heavy origination fee. It's not yet decided what the numbers will be for the current incoming class, right? Fall 2024. But the expectation right now, Nicholas, can you give me the latest number? Is it like 7.6, 8.6, something in that range?
Yes, something in I haven't seen the last, but yeah, but no,
Yeah.
it has been changing a lot.
We try to track how the rate is changing. The way the government does it is there's a specific date when a specific auction occurs, and they're like, oh, we're going to take the rate on this date. Okay, so that date comes in the month of May, and then in May we'll email everyone and let them know what the new rates are, and it'll be all over the websites and everything. So it's not yet decided, but it's likely going to be higher than last year's numbers. So that's the federal options, right? Now the private loan, and when it comes to private loan, I'm primarily talking about the deal that Juno negotiates, okay, which is far better than most things you can find in the market, right? You can borrow the same amount, right, up to the cost of attendance as the federal loans, and you can do it in combination if you want, right? So some people take 20,500 from the federal unsubsidized and the rest through private. Some people just take all private. Some people obviously just take all federal. For most people, right, we expect the interest rate to be cheaper on the private student loan, and there's no origination fee. Okay. So you're like, hey, you're like, oh, that sounds great, sign me up, right? But you have to hold on. You have to think about whether you're going to use public service loan forgiveness and income-driven repayment plans. Okay, these are two features of the federal loans that do not exist in the private world. I have not seen a single lender in the private world offer these features. So if you need public service loan forgiveness, if you're pursuing a career where you think you'll qualify for public service loan forgiveness, okay, you should look into the rules because there's a lot of gotchas there, and there's plenty of articles out there to tell you about those gotchas. But generally speaking, if you're pursuing a career in that line, it may make sense to take federal loans so that you can take advantage of public service loan forgiveness and or income-driven repayment plans, right? Income-driven repayment plans is basically, the government is kind of analyzing your cash flow and making sure the monthly payment you make is not a burden on you, right? So if you're going into a high-paying career, tech, PE, product management, investment banking, all of these kind of things, it tends to be unlikely for you to utilize income-driven repayment plans and or public service loan forgiveness. But those are the two benefits that only federal loans have, right? So if you need those, then you shouldn't be optimizing for the cost savings. You should be, I almost think of it as insurance, right? When you're presented with this set of options, You can go to the federal side and you're buying yourself a little bit of insurance by paying a little bit more, or you can come to the private side, but you don't have that insurance, right? The other thing that is sort of a misunderstanding in the public, right? If you have a federal loan or a private loan, you have a repayment schedule. You're expected to follow that repayment schedule. Okay. On the private loan side, there are options such as forbearance, etc., that may not be yours as a matter of right. But when you reach out to the lender saying, hey, I got laid off, I need a month to get back on my feet, etc., it's not unusual for them to work with you. Okay, you got to make that call. You got to, you have to communicate. But we've been through some tough economic cycles. So even folks for graduating from the top programs have 2-3 months of unexpected career gaps. And during that time, it's worth talking to the lender, whoever it is, right? And oftentimes there is a solution that doesn't hurt you. Okay. I mean, they're still going to charge you interest. That never goes away. But they might say, okay, pay me 1 month later, 2 months later. So, okay, origination fees. So a lot of people ask me, okay, what does this number, how do I compare the federal loan to the private loan? Well, we built a calculator. So where's my calculator? There's my calculator. Okay, juno.us/MBA loans. If you use this calculator, it tells you exactly from a cost perspective. Okay, from a cost perspective, it tells you which is your best option. So let's say you need to borrow 80,000. Don't worry about this, but generally speaking, it's around 30 months for most people, for most incoming students. 10 years is the most common loan term. Touch high, but whatever, right? 7.5. And then this is last year's calculator, but obviously we'll update these to the new numbers once they come out, and the origination fees. And you can kind of see how much this loan is going to cost you over the life of the loan. Okay. And it tells you sort of where you want to take your money from if you want to pay the least, right?
Nikhil, can you zoom in, please? It's difficult to see.
It's too small to see. Let's see. Zoom. Okay. Largely, the main input you have to worry about is your interest rate and term, loan amount, right? And then it will tell you right here at the bottom, what's the cost optimal way to borrow. Okay. And it takes into account the origination fee and everything. So you don't have to think, but what I guess, oh, now it's zoomed in over here. Technology. Okay. But yeah, and another way, if you're trying to just compare numbers on interest rates, one way to think about the federal grad plus rate is to think, okay, if I take 10 years to pay off the loan, it's around 9%. Remember last year's number, so it's going to go up for this year. And then if I'm going to refinance around graduation, which is not uncommon, then it's something like 12.5% for second year students and 10-ish% for incoming students, right? The reason it's not a single number is because the origination fee is sort of something charged upfront. And then now if you allocate it over 10 years, it's less of an impact versus if you allocate it over just 1 or 2 years, it's a bigger impact. Okay. But yeah, like I said, from a cost perspective, Juno's deal is going to beat your federal options. The question you need to ask yourself is, do I need public service loan forgiveness or income driven? Okay, so I have beat the slide to death, but any questions about this stuff, please share in the chat. Nicholas is tackling it and he'll bubble up questions to me as they make sense.
So yeah, there were some questions about refinancing. I think that that previous math is pretty much responsive, right? Like most people think about prepaying their loan, but really end up happening is that once you get a job, if the rate environment haven't changed that much, or actually rates have gone down, you will likely want to check refinancing, right? Because it's basically, and this is very different from the traditional mortgage. When you think of refinancing, there are transaction costs. There's no transaction costs. It's pretty actually easy. Many people refinance in a week, and then you capitalize over 3 days. Okay.
No, I refinanced 3 times.
3 times. Wow, that's a record. So that really, your ordinary origination fee, you pay it for once, and you will see an APR that will say like, hey, you're assuming a 10-year or more that you will keep that loan. But if you keep it just for 2 years, or for second-year students for 1 year, it's a cost that you pay for that amount of time, right? So it really capitalizes a lot.
Yeah, it hits you hard, if you, yeah, I mean, so no one knows what rate environments are going to do, but it's not unusual. Basically, the way to think about it is when a lender gives you a loan right now, you are higher risk because they don't know if you're going to get a job. Okay. Once you graduate, and they don't know if you're going to graduate, but once you graduate and you have a job, they can, if you apply to refinance, they can reevaluate and say, oh, now it's a lower risk that I get my money back, and therefore they can drop the interest rate. So, yeah. Okay. So for international students, I didn't realize we snuck this slide in here, but it's good we did. Quick raise of hands. Who am I talking to? How many international students?
Maybe just drop in the chat where you guys are coming from. Could be really interesting too.
Yeah, good number here. Good number here. I'm seeing, hands keep going up. So okay, great. Okay, so we'll spend a few minutes here, right? And I'm sorry, but it's more expensive. Okay. For international students coming to the US, there's generally sort of three options, right? The best option by far is getting a cosigner who is a US person, right? The beauty of this is you immediately get, put into this bucket, right? So you can't do the federal loan still, but you can still get the private loans, and you tend to get the same rates that the domestic students are getting. Okay. And they tend to be like sometimes 5%, 6% lower than what you can get from either home country loans or specialty lenders, right? The specialty lenders, the 10, Nicholas, I don't know who's offering 10% right now, right? Amongst that crowd, it's like 11, 12, 13% right now on the low end. So it tends to be pretty expensive. Some of them only offer variable rates, some of them only offer fixed rates. You don't sort of get as much optionality that you might get with the co-signed loan. Okay. And usually you see an origination fee with these lenders as well. Okay. So it tends to be pretty expensive, but the beauty of them is, they're sort of, there's no cosigner required, there's no collateral required. You sort of fill out an application, you're going to a good school, you get the loan, right? There's a simplicity to that, but it's expensive. Now, home country loans, again, there's a very wide variety depending on country and depending on the specific bank or lender in the country. But especially speaking to the bigger countries, right, where a lot of folks come from, like India, right? Interest rates tend to be high, right? 10% plus, etc. on these student loans. And it's not, especially for the biggest players, it's usually collateralized, right? So it's like, oh, okay, put your house here, or there's some collateral required before they'll give that loan. And then the other
Nikhil, can you put in presentation mode? It's very small right now.
I'm so sorry.
No worries.
So usually what happens with these is, because as you're coming into MBA program, you're still young enough in your career, you usually don't have real estate, right? So it might be like a parent's house or something that gets collateralized in getting that loan. Okay, so that's kind of the two buckets people are looking at when they are not having a US-based cosigner. The other risk with home country based loan, the specialty lenders usually are lending in USD. Okay, so you earn in USD, you pay off your loan in USD, you're not exposed to Forex risk. But if you have a loan in, like, I'm from India, INR, right? And you're earning in USD, it could be good for you or it could be bad for you, right? So there's just an additional layer of risk there that you have to think about. Okay. Now, for federal student loans, you only have one option. Okay, it's going to be a 10-year loan. It's going to be a fully deferred repayment plan, which means you don't make any payments while you're in school, and you start your payments 6 months after graduation. And it's going to be a fixed interest rate. The government doesn't give you selections. Okay, that's sort of the option you've already picked if you picked a federal student loan. On the private side, you tend to get this, these sliders that you can play around with. Okay, and so we'll talk about them briefly. I'm not going to go into too much depth here, but basically you can choose how long the repayment period is. Okay, whether you want to pay it off in very quickly in 5 years, so the monthly payment is big, the interest rate is usually a little bit less, versus 15 years, you get longer to pay it off, the monthly payment is smaller, but the interest rate tends to be higher. Similar kind of thing with the repayment plan. As you go down this list, it's increasing the amount of money you have to pay while you're in school. Like immediate and interest only, usually it's only, folks who have a working spouse that take one of those options. Most people are taking a deferred or a fixed. Okay. And then finally, for the rate type, pretty much everyone's taking fixed. I don't know the numbers, but my guess is it's like 1% variable, 99% fixed. Okay. And part of the reason for that is refinancing, right? If you have a fixed rate and rates come down, you can just refinance into a lower fixed rate, right? You don't have to keep your exposure open on the upside. Okay, so how to select a loan term? Yeah, there's some savings in selecting a shorter loan term on the interest rate. So go as short as you want, but just make sure you're comfortable with the cash flow situation post-graduation. Repayment plan, we spoke about this a little bit. Timeline, one thing to understand is the clock. The exception to this rule is the immediate repayment plan, right? So the fully deferred, the fixed, and the interest only, which are by far the most popular repayment plans, you have a deferment period, right? So you graduate, then there's another 6 to 9 months, and then the clock on the term length begins. Okay, so that's kind of how the loan works. So if you're an incoming student, you're really taking a 12-year loan when you're signing up for a 10-year loan, right? Because the first 2 years you're not making any payments. Okay. Okay, I'll stop there. I have some stuff about Juno and what we do differently, etc. But what questions do we have? Can I answer some questions, Nicholas?
I like to think that I did a good job answering
Okay.
most. But
Anyone who thinks
there was a
Nicholas
question
is
that,
not fast at typing.
yeah, okay, there's a refinancing. So I think you already touched base on that, but maybe,
Yeah, we can expand on that.
yeah.
So refinancing, the way it works is you got to wait until you're in your last semester in school, at least, right? Many people wait until they've graduated and got their first couple of pay stubs from their new job, right? So at the moment that happens, you obviously come back to your favorite person in financing student loans, right, Juno, and then we typically have a deal for you where you submit a quick application. It doesn't hurt your credit score or anything like that, and it shows you the new rates that you can get. If you like it, you sort of click, okay, I want to, refinance, and this is the rate I want, and this is the loan term I want, etc. You're basically getting a new loan that's paying off the old loan. Okay. So you sort of follow that process. It's going to ask you information about your old loan. You fill that out, and then the new lender sends a check to the old lender. That loan is paid off, and now you have a new loan, right? And till date, there's no, all the refinancing lenders, they don't have any transaction costs, right, on student loan refinancing. So there's no like, oh, you need to pay $5,000 to do the refinancing, right? It's just you're paying interest to person A, and then next day you're paying interest to person B at a different, presumably lower rate if you're doing this, right? Yeah, so it's kind of simpler than it sounds. Even when I say these words, I feel like I make it sound complicated. I should figure out how to make it sound simpler. But it's a relatively simple transaction you're doing, right? You're taking a loan that pays off a loan that you already have. So the old loan goes away, you have a new loan. Okay.
I'm
Hopefully
seeing some good strategies in the chat of like maximizing financial aid by spending all your money so you look more broke.
yeah, so I think that's why maybe people, the need-based schools go off income more than the exact balance on your savings account or your stock plan. Yeah, I don't think that's gonna help you. Yeah, okay, this is a great question. So credit cards, I give that advice a lot actually. So someone asked a question, does it make sense to open up a new credit card to spend money above the cost of attendance? Okay. Okay. So A, yes, it makes sense. Be very careful. I have never said this advice in an audience of 128 people. I'm taking big risk here. Okay. If you do it, number one, you want to take out a credit card that has a 0% introductory APR offer for something like 18 months. Okay. And then in your first 9-10 months in school, you're going to spend on the credit card. In your internship, you're going to completely pay off that credit card. And then you're going to take a credit card with a different bank, which also offers the 0% introductory APR. And then you're going to use that credit card, for your second year. And then again, when you graduate, you hopefully get a signing bonus and you just pay that credit card off. Risky, risky, risky is what you should be thinking in your head when you play this game. Okay. When you do something like this, if you're not able to pay off that credit card, right, your interest rate is, bad, right? It's like 20%, 24%, etc. So you really don't want to find yourself in a situation where you're not able to pay off that credit card. I've seen some people, what they do is they open a high yield savings account, maybe the Juno one, right? They have cash to use, but instead they use this credit card strategy. And then, whenever the intro APR period ends, they just use the cash to pay it off. So there's different ways to do it. I like it. I'm very careful about saying it in such a big audience just because, the risk is high.
Can you talk about the merits and drawbacks of an interest-only plan?
Yeah, it's really cash flow in your daily life, right? So when you take a interest, you take a deferred plan, $0 out of your pocket while you're in school, right? You take an interest-only plan, usually a few $100 per month out of your pocket each month. And if you don't have any income, well, where's that money coming from? It's really just coming from the loan you took, right? So probably doesn't make sense. But if you have income, maybe you have a side hustle, maybe you have an existing business that's going to keep going, maybe you have a spouse that's earning, right? Or whatever the setup is, if you have income, then sometimes it makes sense to take that interest-only plan to basically get a lower interest rate, right? The other thing I'll add is you accumulate what's called simple interest, right? If you're getting really hacky in optimizing this stuff, right? You during this period, right, between the disbursement date and the end of the grace period, right, before full repayment begins, you don't have compounding interest, you have simple interest. What that means is unless you're actually reducing your principal balance, there's no point in making a payment. You'd rather save that money, let it grow, right? And then right before repayment starts, right before that money gets capitalized and becomes additional principal, right? That's when you log in and make your payment. Now, again, the risk is you forget to log in and make that payment, and then all that money capitalizes and you're paying interest on all that money. So yeah, it's certainly an optimization strategy. The savings are not going to be gigantic, right? You might save a few $100, but if you're really like optimizing the loan to the nth degree, that's kind of the strategy you would do. Everyone's like, man, this guy has had way too much time thinking about student loans.
Yeah. It's our passion.
Sounds like 2008 real estate CDs. No, so yes, there is a secondary market for student loans, but no, it's not the mortgage MBS situation or the CDO situation that I actually watched The Big Short just yesterday or day before on the plane. So yeah. Yeah, cash right before getting into the program, 30 grand. That's my number. It's a luxury. It's not a necessity. Most people will not have that cash once they've crossed sort of their first semester. But 30 grand is what I like to hold on to. Penalties with early repayments, nope, not on the domestic side. And really not on the international side either, right, Nicholas? Early, you might pay an origination fee, but you're not paying
Yeah.
extra
So
because you
it's yeah.
repay.
Once you take the loan, you already pay the origination fee, so it's a sunk cost.
Yeah.
If you're planning to do so, maybe you want to plan before you take the original loan with an origination fee, right? But yeah, no, not on any loan that we offer, at least, and not that I'm aware of.
Yeah. No, not on nothing. Yeah. What about paying it in cash if you can afford it? You have to ask what's your best alternative with that cash, right? So option number one, pay it off. Option number two, uh, depends on your time horizon, right? But there's plenty of real estate investments that can make you, 14, 15%, right? Um, Juno did a fund 2 years ago now, Nicholas. We did a fund with
Yes.
a bunch of our members, and they're getting 10% cash on cash, and on top of that, the properties are appreciating, etc. So just think about what's the best use of your cash, right? If you can't find a use that's earning you more than your interest rate in a relatively low risk way, then yeah, use the cash to pay for business school. But if you can find one of those investments, the other thing I would say is also depends on your career choice. Like I said, if you're going into entrepreneurship through acquisition, if you're going to buy a business, right, which I know is a minority of folks over here, but just for those folks, cash is king. Okay. The difference between the guy who, you can buy the same business, you can have the same performance. One guy is going to come out making $2 million. Then the guy next to him is going to come out making $6 million. And the only difference between the two was, one guy had 50K or 100K to inject into the business on day one that the other guy didn't. Okay.
Yeah, I'll say one more reason, and is the optionality. Well, two more reasons. One is obviously cash gives you optionality that I think is something you mentioned before. And the other thing is that refinancing, right? We don't know, if you can get a similar low rate on a high yield savings account or an alternative investment, then 2 years from now, rates go down significantly. You can refinance that loan as Nikhil did, right? I mean, I don't want to tell people what your rate is, right? Because it's probably like nothing that exists in this market, but basically you can get that. If you lose the ability to take loans if you all graduate, or even if you pass your first year, right? So something to consider if you're not going to use that option, because at the end of the day you may be able to refinance to a lower rate, but if you want to do it after the fact, it's usually not a possibility.
Yeah, that's true. Okay. Non-loan options. Scholarships, sort of the best one. I don't know. It's usually some format of loan, right? Like it's either a student loan, most popular, right? Then there's what's that one called? Like an asset-backed loan, margin loan. Is that the name? Margin loan. But usually you have to have a very significant balance, right? And then you risk your stocks getting liquidated at the exact wrong time if you take a margin loan. But there are people who take some margin loan, right? Like they don't heavily leverage their stock portfolio. They just leverage it a little bit. I bank with M1. They allow margin loans. I've never taken one, but if someone wants to do it, maybe that's something they do.
Nikhil, some folks have to drop off. Maybe if we can finish the presentation, then we can continue with some.
Okay. So how Juno works, right? So basically before Juno, everyone goes to individual banks, shops around, gets a rate, etc. Right? After Juno, what we do is we aggregate our buying power. We go to all those banks and some banks you've never heard of, and we say, hey, who's going to give us the best deal? By the way, I want a rate that's below what's on your website, right? So you literally can go to, I don't know, SallyMay.com, get a rate. Then you come to Juno, get the same exact loan from Sally Mae, and now the rate is lower because you're a Juno member. Okay, that's this is zero downside. We make it a no-brainer. So you're like, okay, wait a second, how is that possible, right? The truth of the matter is this: in this industry, people are paying like 8-10% of the loan amount as a commission. Okay, you go to Google Ads, you search best student loan, and you click on that link. Just take a guess how much Google just made. They made like $20-$30. Okay, so because of the obscene marketing budgets, right, we are able to go negotiate with them and say, hey, we'll charge you a lot less, right, a fraction of this amount, and we just need a lower interest rate for our members, right? Then you're like, okay, wait a second, but then how do you get everyone to sign up? Well, it's really because of you, right? And folks like John. Basically 8 out of 10 members hear about us from a friend, right? So we really count on you to go spread the word amongst the incoming class and say, okay, this is, very likely going to be your best option. You should sign up. It doesn't cost you anything to sign up. It's a free option. You check your rate, you like it, you take it, you don't like it, you don't take it. Okay. And we are so confident about this. Oh, where's my confidence slide? Here you go. We're so confident about this, we back it up with the lowest rate guarantee. No one else in the industry will do this. Okay. If you find a lower rate somewhere else, there are other people who will say, oh, okay, you found a lower rate somewhere else, go take that lower rate. Okay, I'll give you $100. I'm sorry. No, what we do is we get the lender we are working with to give you that same lower rate, and we cut you a check for 1% of your loan amount. Okay, so if you're borrowing $100,000, you found a lower rate on someone else's website, right? You come back and show that to us. We're going to give you that same lower rate, match everything exactly, and on top of that, we're going to send you a check for $1,000. So that's basically just us being, confident in our process to negotiate what we negotiate. Obviously, this applies to certain deals, doesn't apply to certain deals, etc. But for the vast majority of folks, this works. Okay, and the other thing I wanted to point out is just the volume we bring to lenders is usually doubling or tripling their business, right? So when a lender works with us, it's easy for them to say, okay, we're going to double our business overnight. I think we can live with lower margins on our business, right? And that's kind of how this discount of a lower rate comes. Okay. Oh, and we have some pool prizes if your friends take, the negotiated deals. Okay. Yeah, Q&A.
With the prices, Nikhil, so people, well, okay, never mind. I was like, you must too fast the prices. I was like, wanted to give some people to check it out, but it's fine.
No, I want John to throw up the QR code thingy.
Yeah, let me share my screen again. This was awesome. I have like 5 texts from people that I know that are on this call saying how helpful this was. So thank you, Nikhil. You've probably forgotten more about this than I will ever know. So this is super helpful. And again, yeah, go sign up for Juno if you haven't already. I know we've dropped the link in the chat. We'll follow up with the link as well. But thank you for taking the time to do this. And good luck to all of you that are applying, that have already been admitted. Once you get admitted and you start to look at the cost, it can feel overwhelming. It can feel complex. So yeah, glad to have you guys here and appreciate you all joining.
There's some more questions. I don't know if we can stay 5 minutes more.
Yeah, let's hang for 5 more minutes and then if there's any, we can shut it down in about 5.
Yes, for sure.
If you guys don't mind showing some love in the chat for Nikhil and Nicholas for being here, that'd be awesome.
I love the comment. Yeah. Well, thank you, and obviously thank John. It was amazing having this opportunity. So
yeah, this was really fun.
So I promised. Well, I'm inundated.
Sorry, I might have prematurely told them to show you some love. If you have another, did
I
not get
love it. I love
answered.
it. Okay. Where is this?
Do you have stats for CBS? How come
You're not-
CBS is not here? They're probably 25%, 30%.
I had to cut off Yale, which is also 30% to fit it. Sorry. Sorry for all the people going to Yale.
Sorry, Yale.
They were 30%.
Who's Yale again?
That was a great job answering chat questions for how big this Zoom was. So,
Thank you, Nicholas.
well,
About
Uh,
this
any other
strategy,
questions?
there's this chat about here about this is new to me. Is it like downgrading your job to get more aid? I
Yeah,
think they look back 2 years and they ask you for
okay.
tax transcripts and stuff like that. So like, nah, unless you want to downgrade your job for 2 years.
yeah, you're not going to save more money than you're going to get in the fellowship than or the scholarship than you would in just earning more money for a little longer. So just I didn't do it intentionally. I did it because I wanted to work at a startup, but I only did it for about 8 months. And I guess I don't know because it's hard to say how they
Oh, is
factor.
that your comment? That's your comment. I didn't see the last name. Okay.
Yeah, I don't think you're gonna save money doing it, but I think it was I got more aid than I expected, but it was I also had dependents, so hard to say.
Okay, I found one of the questions, and sorry, I know that there's a couple of people that I lost your questions in the way, but one question about what bank account do you recommend for international students? And yeah,
We
actually,
have a deal
Nikhil, I'll
coming.
take
We have a deal
that.
coming. Send me a note, support@joinjuno.com or Nikhil@joinjuno.com, both work. And I'm in the stretches of negotiating the deal, so maybe another couple of weeks. And then we'll send you a link. It's a great bank account. It's basically going to allow you to have a bank account before you come into the country. Okay, very, very few places will allow you to, establish your bank account before, and then depending on which country you're in, you can actually get the physical card as well before you come into the country. And then even if you're not, whichever country you're from, regardless, once you land, you can get the card on your phone, and then you know, you can take the Uber from the airport using your new card. So basically, you set everything up before you land, and then you land and you activate, and you're good to go. So yeah, we're trying to set up that partnership, trying to negotiate some kind of benefit for you guys to get on top of sort of the normal programming, and we hope to hope to launch that in the next couple of weeks for international students. Domestic students, 1,000 banks, go pick a bank. Um, of course, use our high yield savings account, but yeah, go pick a random bank.
Cool. Anything else, Nicholas, or should we wrap it up? I think we're good.
If I'm just, 1 minute, if I'm missing any question, just feel free to put it in the chat right now. What's the catch? It's a common one and a good one, actually.
So the way we structure these deals, right? There's a fixed fee for Juno that's payable, and it ranges, based on deal type, right? Um, and we advertise the fee upfront. We basically send them a pitch deck, okay? And we send them a pitch deck, and the last slide of the pitch deck says our fee is X for this product, non-negotiable. That's the fee, okay? And we set it to be, a little bit below market. That way, no one ever feels afraid of like putting in a bid with us. And that's it. Yeah, everyone bids, and we select the lender that offers the most competitive rates. And the only way we make money is that, right? We're not collecting money from you for an application or to access our deals or anything like that. It's all paid through a pre-negotiated, not pre-negotiated, but like predetermined fee before the auction starts. That way, the auction is focused on getting you the best deal terms that we can get.
We will send a recording, so don't worry about those of you that joined late. yeah, I mean, feel free to, I'm going to put in the chat our email. So feel free, you know, if you have any other question that we haven't not addressed and you want to get in touch with any one of us, feel free to mail here. And yeah, I think is there a risk to us as borrowers to have a high concentration of similar borrowers? No, not at all.
Not to you, there's a risk to perhaps the holder of the note,
Bank, yeah,
but that's their problem. It's not your problem.
yeah, you should maximize for.
By the way, they love the Juno population, right? Our median FICO is 780. They are not worried about this population.
Okay, one final question about documents for co-signers. So the co-signer basically has to kind of sign the loan that you are also signing, right? So they will ask them for income proof, usually last 2 pay stubs. They may ask for a W-2. Yeah, and they will, you know, you can get your rate with a soft check. You will need, you know, their social security number, or actually on our side, you can ask them to fill their social security number themselves, but you know, in the platform. But once you decide to apply for a loan, and you know, that co-signer will actually have to provide proof of those documents.
Yeah, the other document sometimes that's asked is a proof of address and or proof of identity, right? Basically, they try to use automated systems to verify all that. But if the automated systems fail, then, or, you know, come back with not verified, then they ask for proof. Yeah.
Does your co-signer income affect your rate, or is only based on credit score?
Your income, when you, this is exclusively talking about Juno, right? At Juno, when you apply by yourself without a cosigner, right, it's more dependent on your credit profile. When you apply with the income, when you apply with the cosigner's income and debt to income ratio have a significant effect on the interest rate, right? This is very purposefully by design, because we have a lot of our members, 67% of our members do not want to use a cosigner. Okay. MBA students coming in tend to be a little bit older. They don't like to use cosigners, or they don't want to ask their parents. They might not have a spouse yet. And so, you know, we we design this product to make sure even folks without a cosigner are getting fabulous rates. That's fine, Margarita. If your credit worthiness is better, they're not going to ding you for having a cosigner. When you apply with a cosigner, there's 2 possible outcomes compared to applying by yourself. Okay. If you apply with a cosigner who does not qualify at all, you just get completely rejected, and then you should just be applying by yourself. Okay. But if you get approved for a cosigned loan, that rate is going to be equal or better than whatever you could have gotten approved for the individual. And the absolute best thing to do is just use our soft rate check tool, submit 2 applications, submit 2 soft rate checks, not 2 applications, submit 2 soft rate checks, 1 cosigned, 1 no cosigned. You'll see the rates. Then you decide which one you want to move forward with. That's it. Okay, I do have to bounce. My son is waiting for me. So
No, this is great. Thank you guys for staying a few minutes late. And yeah, thanks everyone for joining. This is super helpful. We'll send out the recording.
see you guys.
Thank you, everyone.